Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Tuesday, February 26th. For the second time in a month, Citigroup has helped bail out one of its internal hedge funds. This time, the investment bank is providing a $500 million line of credit to Falcon Strategies, which reportedly lost 30% in 2007 as a result of bad subprime mortgage bets. One of the 5 funds in the Falcon Group, Falcon Strategies Plus, which debuted last fall, touted double leverage of the other funds in the range, and after just 3 months, lost more than half of its $20 million in assets. The Citi spokesman has blamed the fund's poor performance on the current fixed income market problems. The move comes just weeks after Citi injected $100 million into CSO Partners after it had lost 11% and barred investors from withdrawing their money. Citi reportedly is moving Falcon's $10 billion in assets to its balance sheets. And making our hedge fund headlines a little sweeter is the fact that hedge funds are high on sugar, as the crop and other soft commodities have resulted in sugar-coated returns. Mulvaney Capital, a UK quant hedge fund, for example, nearly wiped out 2007 losses by producing 21.5% in January alone. One commodity hedgee told the Financial News soft commodities were overlooked for years and coffee, sugar, and cocoa were languishing. Things are changing. According to FN, trading sugar option on the UK derivatives exchange, Life set a new record for the second month in a row and is 10 times higher than this time last year. Helping spike sugar as well as wheat and corn, says FN, has been the creation of Brazil's biofuels industry, which requires those crops to make ethanol. In other hedge fund headlines, more details have emerged concerning the closing of 2 DB Zwirn's largest funds, according to various media reports. While investors sought to pull roughly $2 billion from the firm, the New York-based hedge funds now appears to be preparing to sell assets of the 2 funds in question, the onshore and offshore version of the Special Opportunities Fund. Both versions of the account together represent $4 billion of Zwirn's $5 billion in assets under management. Zwirn reportedly will continue to manage the remaining $1 billion, but one observer suggests the latest moves don't bode well for the hedge fund. Turning to hedge fund headlines in Asia, market watchers expect real estate investment trusts in Malaysia to thrive, with little adverse effect seen from subprime mortgage problems. An unnamed Malaysian REIT expert told The Star, quote, "We don't see a huge negative impact on the REIT industry here, as the debt exposure of U.S. investors in the local REIT is small. The irony appears to be that Malaysia may have been spared the pain because it has yet to attract many U.S. investors because of the small size of the domestic trusts." Chief Operating Officer at Axis REIT Managers Stuart LeBroy said in a Star interview that the Malaysian REITs should be able to produce a minimum of 6% this year, in contrast to the negative returns for the industry elsewhere in the world. The yield depends, however, on which sector investors place their funds. This rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge fund section and read the latest developments.